get to the traders' second half playbooks. Jim, you're up first. What are you doing for the second half?
Well, Michelle, I'm a value investor, so where do value investors look right now? They look in energy, they look in financials. That's where I do see value. I can't tell you exactly when it's going to be unlocked. For financials, you need a steeper yield curve. That will happen once these trade issues are resolved, but not before. I think there's also some select names in retail, select names like a Starbucks or a Dick's where you can find value. Starbucks has a little turnaround to do. Dick's already has some momentum. That's where I'm looking for the next quarter.
Mr. New World.
A couple of bullet points. Number one, don't predict where the market is going. Prepare for it to go to the worst possible place for your portfolio. Number one.
Always or just right now?
I think right now. I think right now it's important to do that. Energy pricing, I still think that is going to remain strong. Amazon accounting for 36% of the overall S&P gain so far year to date. Microsoft, Apple, Netflix, 18, 15, 15. You're talking about 84% of the overall S&P. I don't think that changes. Technology is a strong place to be. U.S.-centric focus is important for the second half of the year. And the last thing is be prepared for the conversation. I am not saying it indicates anything. I'm just saying be prepared for the conversation of when the yield curve inverts, because I think that is going to be in the second half of the year. The headline, what do you do with it? I'm not sure, but it's going to be a
That
topic.
would explain the banks. Edelweiss, second half playbook.
I also think the banks do well. I'm keeping my fingers crossed that they do, because I do believe rates are going to go up. I also like healthcare. And in addition to McKesson and AmerisourceBergen, I like Allergan. I think Celgene finally is going to come into its own. We saw a little bit of that last week. So I think it's a good, safe place to be, not cyclical at all.
Josh Brown.
Yeah, so we don't make changes based on a calendar quarter turning over, but one thing I'll say is we remain overweight international. International equities are doing worse this year than U.S. They did better last year. That push and pull will always exist, but we just think there's better value to be found elsewhere in high-quality dividend-paying international stocks than just chasing the same five S&P tech giants up. So that has not changed. We also did not abandon fixed income, REITs, utilities, which are acting better as the rate situation gets a little bit murkier. We did not flee from those expecting a 4% yield in the 10-year because I just don't see that as being the right behavior given where we are in the cycle.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.